we only see this hourly fair value gap get supported, right? This hourly fair value gap got supported. Usually I use these fair value gaps when prices reaches to them. I expect some type of movement on this area, nothing down here. Once we get movement down here, I don't really mind. I don't really mind like playing, but as long as we get kind of closes above this area, um, on the smaller time frame, we could look for setups, right? Could look for possible setups. Right here, we kind of wicked. Right here, we had a candle close, but we soon recovered up. We're retracing back down, and we're soon recovering up, right? So this hourly fair value gap, we could use it as support, right? Do we have any setups to basically confirm our entries? No, not really, but we don't really see any fair value gaps either, so. As of now, this is just kind of like a play where you could use your daily contracts, right? You could actually take a play in the middle right here, basically in the retrace right here, and then target the highs, right? Target possibly the middle of the gap if you want to try playing gap fill. All right, this itself acts as a resistance, right? Could try playing gap fill, try aiming the middle of the gap, or however you want to take your targets, right? Doesn't really matter, but let's just see how this kind of plays out. What am I looking for? I'm just looking for potential bullish fair value gaps to basically enter in on the trade, right? Right here, we actually do have a bullish fair value gap, right? We do have this bullish fair value gap. We come back down, test it. So this kind of acts like it's support. But we don't really have that inverse setup just yet. Right here, it looks like we rejected the middle off of a gap, right? What did I say? You could target, if you enter down here, you could target the middle of the gap, right? So you could have taken a place something like this, right? So we see that this hourly fair value gap got supported, right? We come up, retrace down, and we could basically take an entry right here, right? Target the middle of the gap. Could get something like this. But do we really see that setup where it's kind of like of our inverse setup? No, not really. But we do start seeing that now we're approaching our support again, which is what? The hourly fair value gap, right? And you don't always need to have an hourly fair value gap. I only use these when we're like close to them, right? And that's only if we're playing like above it. If it was like a bearish one, it'll be the under part, right? So bullish, I'm looking for plays above here. I want to see if we could get some sort of fair value gap so we could continue to the upside to get supported. This is on bullish fair value gaps on like the hourly or like 30-minute works as well. Just I don't use that on the 15 or the 10, right? So I'll use it like on the 30-minute. Do we see one on the 30-minute? Yeah, we do, but that one got filled. Do we see one on the hour? Yes, we do. And if we actually do pay attention, the way we use fibs, right, is we get the high, get the low, and then get the high, right? We could use either this high or this high, but since this was the last high that got created, I'll use this low, this higher time frame low, mark the higher time frame high, which will be right here, and we can actually see that price actually retraces to the 0.5 area, and we can actually see that price is now on this fair value gap, right? You can see that there's fair value gaps here, right? And you guys are not acting, but you guys are asking like which fair value gap should I use? Should I use this one, or like on the 30-minute, right? On the 30-minute, you see that there's fair value gaps, right? Which one would you use? You're gonna use the one that is basically under the 0.5, right? So this is gonna really determine which fair value gaps you use. So that's what I use FIB retracement. It's like the other way I use FIB retracement. We're trying to pull back to the 0.5 so we could get some type of movement to continue the trend, right? And the only way you could use this is if you understand your trend, right? Because FIBs, they determine your premium and your discount. What is premium? Just price. It's a fancy word of saying price. So premium means when price is like at their shit, it doesn't really mean anything. It just means price, right? But that's when the premium is hot, right? So on this 0.5 and the 0, right? Price is really like hot, right? So that's kind of gay. Hold on. Let me just change the color real quick. Right here. This would be red. Here, this would be red. Wait, no, this would be green. Here, this would be red. Alright. So this is just for you guys to get a better example. When you're buying your contracts, right? You're trying to buy your contracts when they're cheap, right? So right here we do have the fib for the upside to the downside, right? Right here we actually see that, well, mine is white, right? But this is just for you guys to get a visual representation of what I mean, right? Right here is where we don't want to buy, and right here is where we want to buy, right? We're trying to buy our contracts at a discount to continue higher, right? This is obviously knowing our trend. And what is our trend? We're uptrending, right? We see that we're uptrending, right? We could see that we're drawing down to the 0.5. We see that cons are now at our cheap price. Obviously, if you were swinging these, you will basically want to use those higher time frame contracts, right? Those weekly contracts, right? You're going to want to be using those to basically play this play on the hourly, right? But if we go on the smaller time frame, right? Don't really see any setup to basically play with these fibs, but that's just an example of what I mean. Like for the fibs, we're gonna wanna take the low, take the high, and then we retrace, make another low, and then we take the high, right? On the higher time frames, if you were buying weekly contracts, your discount will be right here. Your discount will be right here, so you could target all the way up here, right? And again, price is going to retrace to the 0.5 area. Where is it also going to retrace? To a fair value gap. What are fair value gaps? Or like bullish fair value gaps? They basically support price, right? They support the trend. Once we see that this hourly fair value gap gets inversed, and we could see lows get taken, then that's when we stop our continuation of our uptrend, right? Actually, go on smart time frames, we could try looking for our setup, right? Right here, we could see times where price kind of retraced, held the fair value gap. Right here, it looked like we were gonna fill it, but price supported it, right? We could try getting a play in the middle here, take a long position somewhere like this, but this is really nothing too crazy other than just a bullish 10-minute fair value gap, right? That eventually got inversed. I wouldn't personally take this play, but if you want to take this play, then go for it. I would wait for my setup. By the way, I set the target right there because we do have this gap as well. We do have this down gap right here. We could see that we rejected it, but we could take price at the middle of this. I mean, not take price, take profit on the middle of this gap, right? We could use that as like a target because this is pretty big, but you could also target that high, right? This would be your second take profit. And what are you also looking for? You're looking for bullish fair value gaps to support, right? Do we have any bullish fair value gaps to support? No, not really. So we're going to be wanting to take profit on our first take profit, or we could try waiting, but we can see that there was no fair value gaps to support. So we could kind of see price kind of drew back down, and now we're either at break even on our contracts or probably down like 20%, 30% because of theta, right? Now, what are we looking for? We're looking for this hourly fair value gap to get supported, right? Right here, we actually see that we have a bearish fair value gap, right? Go on smaller time frames. Do we see any other ones? The 10-minute lines up with the 5, so we're going to want to try inversing this, right? We can also see that we kind of swept this low, right? So aside from this fair value gap, we could remove this, right? Because we know that we're being supported by it. If you want, you could add it, but it would be kind of too much on my screen, right? We did take out this low. What are we waiting for this fair value gap? We're waiting for this fair value gap to get filled, so then we could have that inverse type of setup, right? So we could take a trade as soon as it inverses. Right there, it hasn't inversed yet. Right there, it inversed. Really give a chance to buy. Did it inverse on the 3? Oh shit. Doesn't let me go to that point. But now we could consider this as an inverse fair value gap, right? So one or two things you could do here. So when the fair value gap kind of inverses like this, I'll take a position, like a light position, knowing that I'm gonna re-enter, right? Because in order for this setup to be an A+, we're going to want to wait for a retracement down here, right? We can also see bullish fair value gaps here. Not bullish fair value gaps, but just a bullish fair value gap. I don't know why I pluraled it. But we see a bullish fair value gap here, right? So now this kind of acts as double support, plus our hourly fair value gap that's holding us above. That kind of acts as our support, right? Now we have like 3 fair value gaps supporting price, right? So from here, you could take your buy position here, knowing that you're going to probably want to add down here, be in light, have your stop losses underneath the fair value gaps. What are you going to want to target? You're going to want to target basically buy side liquidity, which would be here or here. I personally want to take it right here. And then this would be third take profit. And then if you want, you can also take profit up here too, whichever one, right? Usually, I'll be in a light position when it inverses like this too crazy. Because why? I'm waiting for price to retrace down here, right? And I'll be in the light position just in case it doesn't retrace, right? But if you want that A plus setup, you're gonna want to wait for the retrace, because if you enter here with a full position, and then if you see that price retrace down, then you're gonna be like kind of fucked, you know? Like, let's look at this, right? Does this risk to reward make sense for a full position, right? Does it really make sense? Like, obviously, yeah, because our reward is too high, but look at our risk, right? It's way too big. If we have a retrace down here, this would be way better. And now you can see, you could actually see price run, right? This could be your first day profit. This could be your second. This could be your third, right? But as of right now, if you're in a light position, this will be your risk, right? Since you're in a light position, it's not going to be a bigger size than your normal, but we can see how this kind of runs. Holy shit, I kind of made it too long of an explanation, but fuck it. Right here, we actually take this high, right? Now what are we looking for? We're looking for fair value gaps to support our trade. We're trying to look for any other confluence to basically hold our trade, right? We see bullish fair value gaps get supported now, right? We see this bullish fair value gap, right? And then we see this bullish fair value gap. right? Which fair value gaps am I going to use? I'm going to use basically this one right here. So now we could drag our stop loss, right? We could drag our stop loss above here to basically now lower our risk, or we could already take profits from there, right? But if you want to hold this trade to take profit, you're going to be looking for any other confluence to basically see your initial take profit get, you know, taken profit. You're going to want to see bullish fair value gaps get supported, right? And right here, we can also see that the trade kind of went by, right? And we can actually use FIB if we really want to. Right here, we have the low, you have the high, we have the low, and then eventually we're gonna have a high, right? We could determine that once we see like some selling right there, we could see that that high was not created. Now, if you didn't enter in this trade, right? If you didn't enter in this trade and you want to enter on the trade, you're gonna have to know what trend you're playing, right? Obviously, right here, we notice that we inverse this, right? So now we're trying to get like a re-entry back into our trade. Not a re-entry, but if you missed your initial entry because we inverse this fair value gap way too hard, then you're gonna wanna use your fib and kind of see where price kind of pulls back. I mean, not pulls back, where price is gonna want to pull back down, right? Here we don't really have anything. But we do start seeing that we're reaching our first take profit. Do we see any fair value gaps to hold our trade? Just this one. And you're going to keep dragging your stop loss above this fair value gap to basically hold your trade, right? Right there, you could have been stopped out. Price kind of held. Low-key, if you were playing fib too, then you could enter on that one. Just grab this low for a quick scalp, right? Could see once this low is created, I'm pretty sure you could kind of see on the higher time frame. I mean, not higher time frame. On the lower time frame, you can actually see the lows, right? But I can't go that far. You can see price kind of retraces back to the premium, and then you could take like another trade, something like this. If you missed your first trade to the upside, right? You could take a trade like, oh my god, this shit looks messy as hell. You could take a trade like that. Right? You could take another trade like that, and you can see now we are reaching our first take profit. Why is it not taking profit? Right? Reaches our first take profit, reaches our second take profit, and then yeah. Realistically, this was at the end of the day. If you kind of held this at the end of the day, then you'll be kind of crazy. I would personally take profit like somewhere right here, but if you're holding those like weekly contracts, you're gonna want to see basically your not your trend, your trade get supported by these fair value gaps, right? And the way you use fib, right? It's literally simple, right? You come up, come low, come up, come low, come up, come low, come up, right? You're gonna want to get your low and get your high, right? And usually, not usually, all the time, and you're gonna want to mark your low, right? You're gonna want to mark the low that started your trend, right? The low that started your trend, which would be this low, and then you mark your last high. And you could tell which is your last high once you start seeing like kind of like choppy movement, right? You could see some type of choppy movement right here. And now we could determine that this was our high, right? And we're trying to wait for price to retrace somewhere, right? We see fair value gaps, right? We see this fair value gap and then this fair value gap, right? Two fair value gaps. Which one are you going to take? Obviously, we're not going to take this one because this is in the premium. This is where our contracts are hot, right? So if we enter in on here, then our contracts are going to be hot. As soon as we go to our discount, then we're going to be down like negative 20, 30, 50%, right? So we're going to wait for price to retrace down to the 0.5, look for a fair value gap. If anything, it should be closer right here, right? Closer to under the 0.5, the better, right? Right here, we could see price was down here. We retrace down. Retrace down to the 0.5, right? Come back down. And then we reach to the support, right? Down here. And then what are we going to want to do? Going to take a long position. Back to the 0, right? To our 0 right there. Stops literally under the fair value gap, right? Then we'll see some type of movement like this, right? If we go on the hourly time frame, we can actually see some type of reaction on the 0.5, right? Like, obviously you're going to be playing on higher time frame highs, but this is just an example. You'll see these type of movements on the smaller time frame too, right? We have our low, we have our high, we have the last low that was created, and we have our last high that was created, right? What are we going to want to do? We're going to want to mark the last low, mark your high, look for a fair value gap. Because see, we have a fair value gap under the 0.5, right? And now what are we going to want to do? We're going to want to wait for a price to retrace down here and we get some sort of reaction. It will be nice if we get a retest because the retest will really determine if this support is actually valid, right? That's our first entry. We can enter right there. Obviously on higher time frame, not higher time frame, on weekly contracts, right? We come here, we retest it right here the next day. And there we actually see that price is taking this high, this high. We're entering on our discount area. And does it actually pull to the 0? Eventually we do go to our 0. Not our 0, but close to our 0. Right there. So your trade would have looked something like this, right? Obviously on the higher time frame weeks, right? The higher time frame weeks. On the higher time frame contracts, right? Your trade would look something like that. Alright. Same thing if you were playing the downside. Your shit's gonna look like this. Up, low, up, low, up, low. Alright. We're noticing that we're downtrending, right? Obviously, we're looking at bearish fair value gaps, right? We see, well, on this drawing, you kind of really don't see any. Let me just fix that real quick for us. Alright, we have bearish fair value gaps, which would be here, here, and here. Bro, this drawing is hella big, right? So, again, how do we do fib on the downtrend? We're gonna want to get our last higher low that was created and mark our low, right? Get fib, and now go right here, right? Um, this is kind of gonna look different. Now your premiums will be, wait, be green, be red. Now we kind of just flip sides, right? Now, pretend this is like the 5 minute, right? Pretend this is the 5. We're gonna want to wait for price to kind of retrace back to the 0.5. If there's like a fair value gap like above, I don't really like taking fair value gaps that are like too far like into the discount, because then the retrace is actually just like a reversal, right? I prefer when the fair value gaps is somewhere like underneath the 0.5, kind of like right here, right? Like this area. It's actually kind of like a bad example because I can't draw for shit. Alright, bro, what am I doing? Right, let me go on the smart time frame. Alright. We can see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? We're gonna wanna, we see that we're downtrending, right? If we inverse, then we are gonna wanna follow the path that we initially inversed, right? So if we see if we like say we took our inverse setup, right? Then we're gonna wanna use these fib retracements to continue our setup, right? So say we were uptrending and then we inversed, and now we went from uptrend to a downtrend. And say you want to enter on the downtrend after the initial trade or initial setup basically happened, right? We're gonna want to wait for a retrace. Where is our retrace? Basically these fair value gaps, right? These bearish fair value gaps right here. Bro, are you serious? These bearish fair value gaps, right? We can see that there's a bearish fair value gap here, but it's in our premium, and this is where our contracts are the most expensive. We're going to want to buy our contracts at the discount, which will be right here. We wait for a price to basically retrace back up. And then we get some sort of reaction right here on under our 0.5. I mean, above our 0.5 this time since we're downtrending, right? And now we basically continue our trend to the, that shit's so sloppy. We're gonna continue our trend to the downside, right? Because this is what fib retracement is. This is where price is gonna react, right? So you're gonna want to short this, take profit back to the zero, stop loss underneath the fair value gap, and yeah. And I always use these fair value gaps to determine my stop, right? If the fair value gap is too fat, then I'll wait for the price to retrace in the middle or at the end, right? And if it's kind of small, then we could enter like on the tip of it, right? And then our stops would be lower. But if it's like fat, this one's not really too fat. I wouldn't mind it being like on the tip. But if it's fat as fuck, where we could lose hella, I'll wait for the retrace back into the middle, which is my favorite entry all the time. But that's basically how you use fibs. Basically, shit's always gonna look like this, right? Bro. Alright, hold on. Let me just show you guys what it kind of looks like. There's gonna be green. One is gonna be green. Bro, my fault. This is looking messy right now. Let me just erase everything. There we go. Let me just up trend, down trend. So this is how you're gonna wanna enter when you see your type of trends, right? So this is a downtrend, right? There's an uptrend, right? This is just for you guys to basically kind of see, right? High, high, low, high, 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 high, right? And downtrend, lower low, lower high, 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 lower low. Then we see that price has fair value gaps right here. Fair value gap right here. Hoping these colors aren't confusing you guys, but I'm just saying when you're uptrending, right, you're not going to want to buy it on the above the 0.5 or the 0, right? Because that's where price is hot. You're going to want to wait for it. All right. You're going to want to wait for price to retrace back down here, back to our discount, right? So we could take it back to the upside, right? And what time frames would you use this on depending on what you're doing, right? So we're day trading, we're going to be using these on the 3-minute or 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, right? Since those are like the day trading time frames, right? So we're gonna want to wait for a price to drop back down here so it could continue higher, right? That's for your uptrend, right? That's for your uptrend. For your downtrend, you're gonna want to wait for price to pull back here. Obviously, sometimes it's not gonna pull back here automatically. Sometimes it's gonna do some move like this, right? Pull back to the discount to get our puts to take it all the way back down here, right? Short position, something like this. Stops underneath the fair value gap. And yeah, that's for your downtrend, right? You're gonna want to buy at the green at your discount, take it to basically back to the 0, right? Right here, uptrend, buy at green at your discount, take it back to the 0, right? And yeah, that's basically how you play FIB. Obviously, on the higher time frame, you could do the exact same thing, but obviously those are gonna involve higher time frames, right? And realistically, we're gonna be playing in the inside of these, right? We're gonna be looking for setups on the inside of these hourly fair value gaps, right? Gonna be looking for our initial day trade setup, right? We can't just be taking trades on the higher time frame, 0 TDs, right? Because our contracts are gonna get cooked. So we see that this was a fair value gap. I already explained it. That was supporting us on the higher time frame. We're gonna be looking for setups in here, right? Looking for setups in here, in here, in here, right? And obviously, if you took weekly contracts, you're gonna want to take um, a trade, something like this. Target basically your 0, right? FIB retracement. Come down here. Just let this play for you guys. Pulls back down to the 0.5. Alright. Retest it again. And then we hit our take profit. And then do we see some sort of drawdown? Yeah. If you were holding weekly cons, this would have hit. Alright. Obviously, I'll take my first take profit here, not wait for the next day. I'll be waiting for market to open up. Alright. I'll be waiting for, or right here on, yeah, I'll be waiting right here and sell my shit right there. I wouldn't be waiting after we see pull down, right? Because now we can actually see on the higher time frame, right? That we created our higher time frame low, coming high, coming low. Now we could actually use the newer fibs and yeah, now we could look for where price is gonna now retrace, right? Yeah. Wait. Yeah. At this point I'm just yapping. But that's basically kind of like the video and stuff like that. The last side was actually created right here before we had that sell off. Do we have a fair value gap to support? Let's check on a lower time frame, 30-minute. Do have that 30-minute fair value gap, but from here, see price just kind of supported that. Right. But at this point, I would be, if on the 30-minute, we're going to want to see that price retrace back to the discount. We're going to want to look for fair value gaps right here underneath this. Do we see any? No, not really. Go right here on this one. Price retrace back down to the premium. Not the premium, back to the discount right here. Price now pulls up. Next day opens, comes back down, pulls back up. Reaches a zero. No, and from there it's too far into the discount. I wouldn't be wanting to look for a place to the upside like that, but this is just for you guys to kind of get the gist of it. But yeah, that's basically how you play FIB, and I'm hoping you guys understand. If you guys have any questions, just let me know. And yeah.